What is the best way to finance an investment? So you've made a decision to invest in property overseas. However, now you are left confused as to the best way to finance your deal. You have researched and read various articles regarding cash investment, gearing, real estate investment trusts. Now you're left even more bewildered than you were before you started looking at the properties themselves. There are many concepts to investing in property that must be considered before you can increase your success. Mainly these are making a sensible offer, opportunity costs, gearing, and cash investment. If you are a foreigner buying abroad, you may also need to consider foreign exchange trends in order to maximize on your profit. Any property is only worth what a buyer is prepared to pay for it. However, you can often lose out on your dream investment by being greedy and insulting to a seller. A general rule of thumb when making an offer below the asking price for a property is to start at 10 to 12% below, working upwards back towards the asking price. Research your seller. Try to find out what their pricing benchmark is. A good way to do this is to speak to their agent, as the agent wants the sale as much as the seller does, but often they will be more honest about the requirements of the seller than the seller themselves. Opportunity costs are the costs of what the investor has to forego in order to have an alternative. In this instance, the return on investment will be the deciding factor as to whether the opportunity is good or not. The important thing to remember when working out true return on investment is to take into account all costs as well. Closing costs on real estate investment in Florida can be as high as 6% of the purchase price and needs to be deducted before calculating overall profit. Other costs that need to be taken into account are renovation costs and management fees. Gearing has many advantages, and the property market is one investment market where you can really use the OPM, other people's money, phenomenon to make gearing work for you. You take a mortgage out on a property, i.e. use the bank's money to buy the property, and through rental you pay back the loan with your income, meaning your personal outlay is minimum. Gearing can be disadvantageous in terms of cash flow and financial risk, especially in markets that are in the first stage of the market cycle, with prices and demand falling. Different real estate investments suit different types of financing, and your own individual financial situation can play the biggest part in your decision. Some investors are cash rich, and therefore the simplest of options is to buy outright using all your own money. This option is often deemed the easiest and least complicated method. However, it is not without its disadvantages. Tying up your cash in property has to be seen as a long-term investment. It's not like banking at high interest or investing in other commodities where you can release cash should the need arise, even if it is costly. With property investment, once the cash is in, you can't get it out until you can find a buyer at the right price. Hence why gearing is usually deemed the preferred method for most investors. Another option considered when investing in overseas property are the various real estate trusts that are available. In the United States, an REIT, Real Estate Investment Trust, is a company, either private or public, that owns and operates income-producing real estate. Some REITs self-finance real estate, although others borrow by the way of mortgage. To be an REIT, a company must distribute at least 90% of its taxable income to shareholders annually in the form of dividends. The key thing to look at in an REIT are its net asset value, its adjusted funds from operation, and its cash available for distribution. In the current economic climate, REITs propose a huge risk as many face challenges from both a slowing US economy and the global financial crisis. Foreign exchange can play a huge part in your overseas property investment. Exchange rates fluctuate constantly many times a day. Fluctuations of up to 10% in a relatively short space of time are common, and even larger movements do happen. If between contracting to purchase a property and paying for it, the exchange rate moves against you by 10%, your local currency price that you will pay will effectively increase by 10%, which could have dramatic consequences for you. In many cases, the transmission of funds for property purchase is left to the last minute, leaving the investor exposed to the prevailing exchange rates and increasing the total cost of the property by a considerable sum. Always speak to a currency specialist when you start the buying process. They can offer you the best advice regarding your personal situation and help you avoid unnecessary costs. Always look at your options when it comes to financing your real estate investment. Research your market, check out all the finance deals available, and most importantly, make the decision that is right for you. A mistake at this stage can be so expensive in the long term.